All right. Hey, hope you're doing well here on a Friday morning. Just kind of getting ready to wrap up the week this week and wanted to just share some thoughts with you. I've been seeing, coming through my email, I'm connected together, of course, with a lot of people. And I've been seeing coming through my email a number of transactions that were what I would be call thin transactions, meaning like, okay, other people are doing a deal and they're saying, hey, I've got this phenomenal deal and, here's the return metrics. We're going to hold it for 5 years. We're going to make, 16.5% return. Our cash on cash is, 4.8%. And it's going to be a fantastic deal. And I think about like, I look at that and immediately, I say, well, what are the underlying assumptions that they're using, to get to 16.5 or 17% return? And then when I look at like their real, kind of going in scenario is maybe 4.75%. And I think about where we at in today's interest rate environment. And so all of these things where that deal's got to be just absolutely perfect in order to really kind of do well. What it made me think about is where are we at and how we approach things. So in the reflection of our company and our disciplines, we have not bought a deal since last August, so a year ago. Now, that particular deal we bought, we put $9 million of our own money into it so that we would have the opportunity as we sold properties to allow for our own existing investor clients to invest in a quality, high-performing deal with good fixed rate terms. So again, we did that then in a knowledge base and knowing that, interest rates are shooting up. It's going to reflect that, pricing is not going to move as quickly as interest rates are moving. And that's exactly what we've seen. So I've seen properties come through where the price looked, like it was adequate or good, but based on the reality of the current interest rate environment, the deal has just not been good. And we've looked at a ton of properties. Now, again, the reason for that is the fact that I've been through the market in, 2008, 2009, 2010 in the real estate market and really got punched in the face, meaning that like, hey, you don't want to buy something that's only going to be a problem 2 to 3 years from now. There's going to be enough challenges like we've seen in the marketplace in certain areas where they continue to elongate, like Fulton County. Everybody knows Fulton County now with what transpired this week with Trump and his team being charged there. But, they've extended evictions, good Lord, even as we stand today here in August of 2023, where evictions run 7 to 11 months there. I mean, it's crazy. We've also seen some of the challenges. The interest rate environment has shot up the fastest that it's ever done, and it's been the highest it's been in 40 years. So those are challenges that were, let's say, unforeseen, but yet because we've had a disciplined approach, we've been able to navigate those things well where other people have not. Now, and how that means or what it does is it carries forward in this moment. We continue to apply that disciplined, methodical approach when we're looking at buying an acquisition. Our number one focus is the preservation of our investment capital and that of our investment partners. And so we look at that and we take it very seriously. And so that's why we haven't bought a deal in the past year, because the deals have not simply been good enough. There are other people out there, they've bought a deal. It's realistically a thin deal, but they're making a fee off of it and they're going to make an investment return, so to speak, off of it if everything goes perfectly. I'm here to tell you that even from my own experience, nothing goes perfectly. And that's why we stick to our discipline of having the proper underwriting in place, having the margin that's there so that things don't have to go perfectly in order for us to make good money and for us to make a good investment return and for us to have safety and security. So these are all things that are critical. And so I want to, caution you as you see these investment opportunities that come along, you've got to look at it and ask, well, how is that being achieved? What does that mean? What's next? I know for us, we're going to see opportunity that's coming. It's, it hasn't been just yet. There's a couple deals that we're looking at right now that look promising. But again, I think that more realistically, they're still yet on the horizon. And what I mean by that is that sellers haven't adjusted a price adjustment to be willing to sell where the pricing makes sense for us or others to buy. Now, there are still people buying, and we've sold. But again, I think that realistically what we'll see is that those folks are currently buying and the numbers are thin, or their assumptions that they're making for interest rates to go down quickly, are probably not in line with the reality of what's going to take place in the market. So for us, I'd rather stick with our conservative approach, forego buying this last year so as that we're in a better position to take advantage of the opportunity that's coming, and for you as a partner with us to be able to take advantage of that opportunity. So I just appreciate you and wanted to share these thoughts as I look at what's going on in the marketplace. Even to, one of the most exciting things, that property we bought last year, again, we always focus on our due diligence, our conservative underwriting, these pieces. They're putting in a $5 billion EV battery plant 15 minutes down the road from that community. So again, and it's going to be fully online by June of 2025. Huge impact, minimum 3,500 jobs going in 15 minutes down the road from us. So it's a great investment that is for us and also for our investors. But again, that's the fruit that you bear out when you stay with a disciplined approach. Look for the right locations, the right community areas, the right demographics that support it. Stay with conservative and fundamental underwriting. Be patient, protect the capital, make smart decisions. I mean, good Lord, I wouldn't have put $9 million in that deal if it wasn't following all of those criterion and enabling me to sleep at night about it. So I just encourage you, be on the watch for these things. And really take heed of it, because there's a lot that's going on in the present moment, and I want to help you navigate these things ahead. So have a blessed and victorious week, for this is the week God has ordained for you.